Hey guys, this is a video. I'm just going to go through the practice exam. So what I've got up on the screen here is the practice exam with solutions. Um, so you have this on Blackboard. Again, as I said on the mock exam question, normally I would do this fairly slowly and write it out on the board and kind of explain as I was going. I think since we're online and you already have the solution, I'm just going to walk through and kind of highlight key things to watch and walk through the questions. Again, any questions, send it to me. So question 18 was just kind of a matching thing. And this isn't a great question. It's not something I do on an exam. Quite honestly, there's more than one good answer for a lot of these. But, it's the right thought process. And, you could certainly argue different correct answers than the ones that are listed in the solution. Question 19 is a consignment question. So again, not totally uncommon. Sometimes they show up on the exam, sometimes they don't. The issue with consignment is, although we've shipped the inventory somewhere else, we're not recording the sale because we haven't actually passed along the risks and rewards of ownership. We've just moved the inventory to a new location. So this October 1st entry is common. Essentially, we're taking it out of our inventory, giving it a different name, calling it consignment inventory. And then the other $900 is the freight, right? Pays the freight of $900. Common mistake is to record that to freight expense. It's not freight expense. It becomes part of your cost of the inventory because inventory includes all the costs to get it to where you want to sell it. Okay? And then at the end of a period or whatever, you will get a report from where you put the inventory saying how much they sold and what fees they charge for selling it. So on this one, Moon Stores will receive a 6% commission and a $4,000 allowance to offset its advertising expense. So at the end of the month, they tell you they sold 60% for $54,000. So we've got, if I look at the October 31st entry, I've got sales of $54,000. The advertising expense they're entitled to is the 60% of the $4,000. The commission expense is the 6% of the $54,000, and the rest is cash that they will remit to you. And then you need to do my cost of goods sold. Again, realize it's 60% of the $56,900, right? The consignment inventory includes the freight, so we need to include that in there. So again, very standard entries. If you see a consignment question, it's the same questions. And get the freight expense into the freight costs into the inventory. Question 20 is a adjusting entries, transactions kind of question. So from chapter 0, review of accounting 102, 103. Again, fairly common approach. You've got a trial balance. And then it lists some things that aren't recorded yet. So we're supposed to prepare the necessary adjusting entries. So key things in here, watch the periods, how many months have gone by, how many months are in the account. And then the journal entries are fairly standard. Prepaid insurance, so a prepaid balance represents the payment on an annual policy that's in effect September to August. So again, watch my dates. I'm December 31. So I assume I need to record for September, October, November, and December, right? Because I don't think we've seen any other entries. Annual depreciation charges on plant equipment $5,600. So I'm going to record the $5,600 of depreciation. Note receivable bears interest of 5%. No interest has been accrued since the note was issued on July 1. So again, I just need to accrue from July 1. 6 months. Included in sales is a $5,000 payment received from a customer for services that will not be performed until 2015. So I haven't provided the services yet, therefore I don't earn this income, so I need to create an unearned revenue, which is last one, sales unearned revenue. Because it's included in sales, I need to take it out. Sorry, I missed the salaries. That's just a normal accrual. And physical inventory count at December 31 indicate the balance of merchandise inventory on hand was 51.5. So again, all we're saying here is right now the books say 54,000, but the count says 51.5, so we need to adjust it. So those are pretty common, and those, should be fine. And then this one also asks for closing entries. Students don't hate closing entries. The purpose of asking for the closing entries in this one is, one, it forces you to track the accounts, to post things to the accounts and keep track of balances. So the question could easily just as easily ask for the ending trial balance or the balance in specific accounts after the entries. So part of what this is getting at is posting to the accounts. So when we look at the entry to sales, it's not the 410,000 that we started with. It's the 410,000 adjusted for the 5,000 we moved to unearned revenue, so we had 405,000. And then closing entries is just booking the opposite, right? So sales is a credit balance. Closing entry means I want to zero it out, so I'm going to debit it to get it to zero. 405,000, and so on and so on and so on for all revenue, all expense accounts, and dividends if we have them. And at the end of the day, everything goes to retained earnings. If you look at how you probably did it in 102, 103, you did income summary, but you don't need income summary. You can go straight to retained earnings. If you go to income summary, that's fine too. Oh, and we do have dividends here, sorry. This could all be done in one entry. Okay, let's do one more and then cut off this video and we'll start. Okay, this is a construction accounting question. As I said on the mock exam question said in class, watch the wording. So in this one, it's total in cost to date at year end. So this is a cumulative number. Okay. So the 4,020,000 at the end of 2013 already includes the 1,620,000 in 2012. So you don't need to add it every year. And then we've got estimated cost to complete at the year end, we've got billings, we've got collections. And similar questions as what you're going to see on these. How much revenue should we report? Make all required journal entries for 2012. How much revenue in 13-14? What balances will be included on Mackey's balance sheet related to this contract? Include names, amounts with calculations. That's a question you're probably going to see on an exam somewhere for one of the concepts anyway. You should understand through these entries what accounts you're creating. So in construction accounting, the key one we're going to have is the contract asset. And you can show the receivable if you want as well. Okay. E, unable to estimate the cost. This means they need to use completed contracts. So they wouldn't record any income. So I'm not going to go through the math. You should be able to follow the numbers. This is a little different order than the mock exam question, but they are the same entries. The first one is my revenue expense, and the difference goes to the asset. The second is the costs I incurred, debit the asset, credit AP materials. Again, that credit is not, this isn't a real entry per se, in that the company would have been recording stuff there, transaction by transaction, all through the year. But for test purposes and for examination purposes, we just pretend essentially it's one consolidated entry at the end of the year. Billings, we create AR and get out of the contract asset, and collections. And so on and so on and so on. And then completed contracts. Basically, we're not going to record anything till the end of the year. Okay, I'm going to call that good now, and I'll come back and start another video for 22.